Hello all, I'm Akshay Menon representing Famous Bazaar. I would like to extend a heartfelt warm welcome to all the participants joining us for a year-end episode 10 of Alternate Universe, titled Into the Minds of Family Offices. It's my pleasure to introduce our esteemed speaker today, Mr. Himanshu Kohli, who brings to the stage a wealth experience spanning over 3 decades in investment banking and private banking. As a co-founder of Client Associates, Mr. Corey has played a pivotal role in building an exceptional team of private bankers dedicated to serving distinguished wealthy families across the country. His illustrious journey includes significant stints with esteemed institutions such as Deutsche Bank Private Banking, DSP Merrill Lynch, and London Forfaiting Group. His experience have truly honed his expertise in the intricate world of finance. Himanshu Kohli's accolade speaks volumes about his impact on the industry. He is recognized as Entrepreneur of the Year for the innovation in the financial services by Entrepreneur India 2023. He has also been honored with an outstanding Young Private Banker Award. In 2019, he was acknowledged as Wealth Management Thought Leader by Association of International Wealth Management of India. Notably, City Wealth UK has acknowledged him as the most prominent Asian leader. Mr. Himanshu holds a prestigious BCom Honours degree from Sri Ram College of Commerce and received his Masters in Finance and Control from University of Delhi. Welcome to the show, sir. Next, let me introduce our esteemed moderator for today's webinar, Mr. Vikaas Sachdeva. He's an industry stalwart with over 3 decades of experience in asset management business. He's currently the managing director of Sundaram Alternate Assets Limited. A warm welcome to you, sir.
Thank you.
The next moderator of the session, Mr. Arjun Nagarajan, works at Sundaram Mutual as a chief economist and communications manager. With an initial 3 years in academics, Arjun's career in the equity market spanned over 12 years, of which he has spent over 10 years at Sundaram Mutual. Arjun was part of Niti Aayog's discussion with economists and on topical issues in recent past. With no further delay, I would like to give the podium to Mr. Vikaas.
Thank you so much, Akshara, and a very warm welcome to Himanshu. Before I start off, I must also compliment PMS Bazaar for the excellent support they have been giving to us for this particular show. I always request PMS Bazaar to introduce themselves also, but I guess they've reached a stage where they don't need any introduction, so I'm not going to talk too much about them. Talking about introductions, as always, it's my privilege to introduce the person behind the professional, Mr. Himanshu Kohli. I think there are so many things which have already been spoken about you, but we've done some investigation in and around you, just to find out what makes you tick as a person, what are your likes, dislikes, how do people perceive you, and we found some very interesting things. But before that, I think it's amazing that you moved from DSP Merrill to Delhi, and after setting up, after stint in Deutsche, you actually set up Client Associates. This was way back, and I think maybe it was the ebullience of youth or insights of the future or both. I think it has been an amazing sort of journey. I've personally witnessed your journey, and it's very gratifying to see Client Associates grow in stature. I think when I talk to people around, whether it's growth, whether it's your advice, the standards of your advice, or whether it's employee retention, I think there are some gold standards which Client Associates has set, right? I think one of the other things which is very unique about you and your firm is your openness to new ideas and experimenting. The latest one is the experience lounge which you've created in Calcutta. I believe it's quite the talk of the town. While awards and everything has been talked about, but let me talk to you about how your team views you. I spoke to quite a few members of your team, and the team absolutely adores you. Okay, I think this was very evident. There's a difference between respect and reverence, and I think you're starting to transcend that.
Right.
They say you're very approachable, you're very kind, very calm, very patient. Some of them actually told me that if something has to be explained 3 times, you will do that, just so that samne wala understands what you're talking about. Your personality quirk, your thing is punctuality and time management. Not only are you extremely punctual, you manage your time well, you also make it a point that even if you're 5 minutes late, you will let the other person know about it. You plan your schedule weeks in advance. So for somebody not to adhere to time schedules and not be on time is really something which irks you. Okay, that's something
Right.
which I've got quite often. You're extremely passionate about fitness and sports. In terms of fitness, so much so that you measure the calorie intake of the food you take in, which I think is probably the need of the hour. And I need to next time sit down with you and understand how you do that. But in terms of sports, going back, if there was one thing you could have done, you would have become a sports person. Uh,
Right.
if you do play 5 or 6 times a week, currently, racket sport is something which you really like, whether it's table tennis, badminton, tennis, squash. Actually, the only one who's been able to beat you in squash off late has been your son, Arjun. Okay,
Right.
I
Right.
think the tip of the old block. But you play cricket also really well. Uh, you've been married a blissful 25 years. You recently celebrated your silver jubilee. You have two amazing kids, a daughter age 21 and son age 19. Your better half, Parul, teaches underprivileged kids, and she's been doing that for the last 17 years. It's quite amazing.
Right.
Uh, your daughter Sanskriti, or Kriti as you call her, is studying at Tufts University in Boston in the US. Son Arjun is at the University of California in San Diego. In 2020, there was an addition to your family, a golden retriever,
Right.
affectionately called Rio,
Right.
came to
Right.
the family and is the apple of everybody's eye, as is expected. Right, golden retrievers are an amazing, they
Right.
are amazing company to be with. Your eye for being meticulous is quite talked about in your firm. Not only are you very clear and very particular about how things need to be written, how spreadsheets need to come in, but it extends to what you wear as well. You dress extremely meticulously, as I can see right now, matching your attire for the occasion, which I think is speaks a lot about you. But you're also quite the foodie. You love food. In fact, you keep inviting people home and said, "Come home. I will treat you to the best prawn curry you would have ever." That's
Right.
that's your comfort food in non-vegetarian. And in
Right.
veg, it's chole puri, right?
Right.
Uh, and you enjoy chas with lunch every day. Despite all of that, you're quite fit. So I really need to spend some time with you. You're deeply inspired by Warren Buffett and your fellow Taurian Sachin Tendulkar. In fact, you're so deeply inspired that you always have examples of these idols to quote. So this is Himanshu Kohli, the person behind the professional for the world.
First of all, Vikas, thanks for that very, very warm and kind introduction. I think you're putting more pressure on me now how to conduct this session. It's really, really nice to hear all this. I think you have done quite a bit of homework. And I must say that I'm surrounded by very generous people, people like you. So my team members, they have given a very good feedback. They are very generous. In fact, I look up to them because there is so much to learn from every team member, youngsters. In fact, you said long-term stints, they don't leave. In fact, I don't leave them. So
Ah,
that is something which
that's
happens over here at Client Associates.
nice. Nice.
So it's nice. I look forward to this discussion session. Thanks once again to you, to PMS Bazaar for conducting this, inviting me over here. And I hope I will be able to do justice to the audience who are here right now logged in to attend this session. So over to you, Vikas. Thank you.
So much, Himanshu. So let's start off with client associates. You know, we talk to a lot of people out there in the industry, and family offices or advising family offices is something which everybody has a view on. Okay, but you've been the pioneer. You've probably seen the entire space evolve right in front of you. So when you started off in 2002, what was the concept, which you had in mind? Was it a family office you had in mind, or a structure where you would be advising? What prompted you to start on that journey?
So idea was to provide solutions across the balance sheet of any client incorporation. That was the basic thought process. And because you may have heard about this, earlier days, there used to be Munshijis, Munimjis, family Sutradhar, Margdarshak. So a lot of Rajas used to have their families' well-wishers who used to preserve what Raja has brought or created or inherited wealth. And a job of a Munshiji used to be to preserve what Raja has created. And in the West, quite a number of family offices emerged, which basically focused not only on preservation but growth also. So Rockefeller is one family office which started this 150 years back, where one of the family members thought that we need to step out and look at outside the business, maybe families' overall wealth, asset allocation, and preserve it and grow it beyond business also. So when we were working for institutions, both Rohit and I co-founded Client Associates. We worked with some of the finest brands, global Indian like Merrill Lynch, Deutsche Bank. Rohit worked with Kotak, 𝐀𝐻𝐿. We realized the piece which is missing is client first, or looking at a problem from the client's point of view, but rather than what you have to sell. And we felt, in spite of working with some of the finest institutions, we are not able to fulfill what the client needs. And to make this possible, we need to really step out and become entrepreneurs and start a professional advisory firm, which is where Client Associates was born with the client first approach. Even our name, Client Associates, client comes first. We are their associates who are helping them on their overall balance sheet. So we launched this concept whereby we will work like a private CFO and address the solutions across the balance sheet which the client could have, be it in their financial assets, be it in their physical assets like property, be it in their business assets, be it the succession. And that is how we thought about this subject. It's not that day one we started all this, we built it up over a period of time. So that is something where we came into picture. And also when we were launching, we were very mindful that we have worked with some finest brands. Today, if we have to go independent, it's a profession of trust. Now, trust can come with larger institutions. Being independent, it will not give that kind of a confidence to a large family. So we have to offer value plus, plus, plus. And that's how the concept of family office we pioneered way back in 2002. We are the oldest or the pioneers of this concept in Indian markets. I would say we relaunched it because Rajas ने तो already launched किया हुआ था ये concept. We relaunched this. And today, with the grace of God, with the hard work of our team and good wishes from our clients or partners like yours, because we have become the largest multifamily office in the country today.
Wonderful. Wonderful. This is amazing. In fact, I remember long back when I was having a chat with you, I asked you this very question. What differentiates client associates from everybody else? If you can just explain it to me in one sentence. And you were very prompt with your reply. You said that when we are sitting on the table to discuss, we are on the side of the client. We sit on the client side of the table. So that was a very profound statement, but you are just probably
Right.
articulating a lot better. Thank you for sharing that. But having said that, you were one of the founders. You set quite a few trends. But over the last few years, this entire space has become very competitive. Correct? Especially over the last 2 decades, when you have been, in action here. Uh, Both in terms of investors have become savvy, competition has intensified. How has CA client associates evolved to keep pace with and stay ahead of the times?
So again, because you have been in this industry for last 25, 30 years, so am I. And I have seen while I was in a job, there are certain institutions which were very large, globally or within India. If they did not keep pace with the changing times, today you do not hear their brand also. So you have to be agile, you have to be thinking ahead of the curve. So there are certain things where we feel very good that we were the thought leaders. One, the whole concept of trusted advisory, where you can set up your professional enterprise. We were the pioneers. Today, there are at least 1,000, if not 10,000 people who have become independent and set up the trusted advisory practice. We were the pioneers of family office. Uh, Today, there are a lot of institutions they talked about that they also are a family office or a multi-family office. In fact, the term has become very fashionable. In 2002, it was even difficult to explain someone what is a family office. We used to talk about financial planning, family office. So sometimes we used to be, clients used to joke, you also help in family planning part of it. So this is something how it has started. We also pioneered the concept of having real estate advisory in a wealth management firm. because a lot of our clients used to have a substantial portion of their wealth in physical assets like property. So, so we started the practice of real estate way back in 2005, whereby we can help our clients in aligning their real estate portfolios. We were one of the first ones to start a desk on investment into unlisted side, unlisted direct investments, because a family office may want to allocate 5% of their wealth into new age businesses, which is where a lot of disruption is happening, and they just want to be a part of that story, but they want to go in a very organized way. And that is where we thought there is a clear cut opportunity for us to start this practice. Uh, but their wallet share could be 5%, but their mind share was disproportionately high, 20-25%. We were the first ones to start this practice on succession planning within a wealth firm, whereby you help families think through their succession, be it the private wealth, be it the business wealth, writing their wills, creating trust structures for them, or even today, families are becoming more global and immigration is becoming a part of every family. So we started this immigration services also within client associates.
Acha.
We are the first ones, Vikas, to even create a VCC structure because Indians are very, very aspirational. They want to diversify beyond India. So under LRS, they want to create a portfolio outside India. So we said rather than just selling a product, let's create a model portfolio of multi-asset classes, multiple geographies, active, passive. And that is where we created a VCC structure based out of Singapore so that our clients can participate in this. So we have been pioneers in this entire journey. Very recently, we have also started a complete full-fledged investment bank within clients. Because today, if I look at it, 80 to 85% of our clients' wealth is in illiquid assets, be it properties or be it their businesses. Now, if we are advising only on the liquid, we are only addressing 15 to 20% of their balance sheet, maybe 20% of the mind share. Our whole idea is to capture 100% mind share. And by providing solutions across the 100% balance sheet, we capture those needs. So this is how we have been evolving over a period of time. As we speak today, we are also doing the first closing of our alternate fund, which is going to invest into Series A and Series B, unlisted space, consumer banking financial services, because that's the space which we have done a lot of work over the last 7-8 years. So I would say it's a continuous journey. Like you keep on learning every day. Like Warren Buffett, he kept on evolving, kept on learning, but kept his principles very simple. Sachin Tendulkar evolved from test cricket to one day to 2020 also over a period of time, but basic fundamentals were very, very similar. Similarly, client associates' basic fundamentals are very, very simple, clear. But as time demands, we keep on evolving over a period of time.
That's a very elaborate answer. Thank you for sharing. And since you talked so much about family offices, I think Arjun has a couple of questions which he would want to probably deep dive on. Arjun, over to you.
Hey, thanks a lot, Vikaas, and thanks, Mr. Kohli. Lovely to have you here. And that's amazing that you had this foresight since 2002 when barely anybody ever talked about family offices to a certain extent. I'll just start off with a quick question on if you can share your experiences with us when you interact with family offices. Are Indian family offices, are they more hands-on and do they tend to micromanage the operating aspects of the fund? Or are they quite similar to global family offices in terms of sort of letting professionals do their thing? How has your experience been with family offices?
So Arjun, I would say we deal with all kinds of clients. There are diverse clients. There are some who understand and who know that they don't know. There are some who do not understand that they don't know. So there are two kinds of investors. So I would say we deal with all kinds of them and we mold ourselves as per what they want. But I would say there are quite a number of family offices which are very, very hands-off. They want the professionals to run the processes, bases certain key decisions on the investment policy, asset allocation policy, manager selection policy, key trends which are shaping up in the society. They want to keep pace with those. So they will be involved more at the strategic decision level. They would like to do once a quarter very thorough meeting, like a board meeting, what they do it while they're running the businesses, while the operating team keeps on doing it on a regular daily basis, weekly basis, monthly basis, but they come in on the board meeting strategic level discussions. And I would also say we did some analysis on how our clients have done. So if we take a sample size of 100 family offices, the one who are slightly more hands-off and who have just left it to the professionals to drive the processes over a 10-year period, they have done far better compared to some of those who are also equally intelligent but very, very hands-on. And they like to be involved in each and everything, which manager is giving the highest return. They like to see it every now and then. Now, Arjun, what happens if you see it 10 times? Once or twice, you'll be tempted to chase that. It's something like this. You are driving on NH8. I am in Delhi, Gurgaon, so NH8. Let's say one lane is stuck and you want to say, okay, fine, this lane is stuck. Let me jump the lane. By the time you jump, this lane starts moving. So there are some people who are very, very hands-on. I would not say all, but generally they tend to underperform because they are very, very myopic, very micro in their thinking, and they forget their big picture. They want to churn their portfolios often. They want to play around with their portfolios. They want to listen to all kinds of noise around them. And they want to feel intellectually challenged on each and everything, which deviates them from their broader or holistic picture. While the clients who are more hands-off, most of them, they tend to do better over there. So that's what my experience is. But what we believe is client first. Let the client decide how they want to function. If they ask us for our views, how should they behave or how should they react, we may be able to give some analysis on how different profile of clients have reacted and what's the outcome. But it's very difficult, someone who's very hands-on to remain hands-off or vice versa also.
Fair enough. That's a very mature approach in a certain sense, where you're actually allowing the client to sort of decide. Wonderful, wonderful sharing your views. If I had to add another question there, what are the key objectives which sort of differentiate one family office from another? So, like you said earlier, when you answered Vikaas, you said that they aren't exactly the same. They are very different. Do they all look at assets in the same way? Do they? Does this have a bearing on the attributes displayed by them in terms of investment styles? So if I were to sort of add on to that, so in your opinion, what proportion of them would be looking at succession? How many will be focused on returns with a lot of focus, and how many would just be looking to preserve the wealth that they've sort of created so far? So do you see this differentiation among the client bases that you actually have?
So 20 years back when we started, Arjun, we used to say you can make out a difference between a family office in Mumbai or a family office in Delhi, or a family office in Hyderabad, Bangalore, or a family office in Chennai, or a family office in Calcutta. The key differentiator used to be Mumbai used to be slightly more towards equity or public market side. Bangalore, Hyderabad used to be slightly more particular towards unlisted private market side. Delhi used to be more towards property side. Chennai used to be slightly more conservative, fixed income, gold. And Calcutta used to be more towards trading, badla. Those were the primary things which used to come to our mind when we used to look at family offices 15, 20 years back. Today, I think practically most of them have evolved. In fact, today, if you ask me, a family office in, let's say, developed part of the world, the US, UK, European countries, or a family office in India think very similarly. Because the world has become smaller, there's a flow of information thanks to technology. People have evolved in their thought process. As a result, quite a number of family offices have become very strategic in nature, hands off. They don't want to get into the day-to-day operational part of their portfolios. They want to leave it to the professionals. But having said that, each and every family's profile is different. Their circumstances could be different. Their family structure could be different. Their risk appetite could be different. Their needs could be different. Their time horizon of those needs could be different. So what we do is we try and understand all this like a family's financial doctor. Plot everything on a dashboard which gives us a clarity about what is the particular need. It's not that one portfolio or one approach or one asset allocation fits all. It's different buckets customized as per their requirements. On the way, I talked about their risk appetite, family circumstances, family size, their geographies where they are located, uh, business versus physical assets versus financial assets needs. And we customize those things as per them. So I would say it's very, very customized. It's like uh, if you meet a good health consultant or a diet consultant, they will customize the plan as per what everyone's body requires it. Similarly, we also customize it as per each and every family circumstances are or their risk profile is and customize it as per that.
Wonderful, wonderful. What I love about your answers is how you actually break it down and so simple, and your analogies are so understandable and relatable to everybody. Wonderful. Over to you, Vikaas.
Thank you, Arjun. It's interesting, I think most of our listeners would find this uh, sort of orientation towards different asset classes in different geographies. I could relate to what you were saying, Mumbai public markets, property in the north. Uh, Amazing. In fact, I just wanted to ask you a question, Himanshu, that there's quite a bit of conversation nowadays that you hear between families and family offices to relocate outside the country. Okay. On one hand, we talk about India as the place to be. Globally, this is where the action is. On the other hand, a lot of family offices are at least talking. I don't know whether they are doing it about relocating outside the country to a place like Dubai, for example. So, is it a function of tax, ease of doing business, currency, ability to diversify geographically? What is it that is prompting all of these conversations? Could you give us some insight on that?
Because what has happened is over a period of time, world has become smaller. You have n number of flights which used to be there 20 years back outside India. Today there are 100 to 200 times more flights. Thanks to technology, world has become smaller. Even COVID brought it even further because people were staying anywhere and they were doing the business like virtually sitting anywhere. Like we are having this meeting today. Maybe 10 years back, this was not even thought about. Today we have 200, 300 people who are attending this meeting from whichever part of the country or world, which was not possible before. So world has become smaller. So today people are saying, yes, there is an opportunity within India. I would rather have an India allocation, India exposure, business in India, and capture this huge opportunity. But maybe my family circumstances or maybe a quality of life, I would like to lead in some other part of the world. Maybe Dubai, maybe US, or maybe some other parts, whichever they find it more suitable, but still do the business and maybe travel once a month or once a quarter and spend about a week to 2 weeks over here and keep on doing this. So we have seen last 4 or 5 years, a lot of people they have become or families have become multi-geography families. So one leg of the family is planning to be outside India. It is also a de-risking strategy because keeping all your eggs in India. Also, maybe thanks to COVID, where there was a lot of emotional trauma, where people were struggling with oxygen, bed, hospital bed, they felt maybe we need to be in some other part of the world. And they could comfortably do business while sitting in another part of the world. Thanks to the air quality in NCR, where people say this kind of an air we don't want to inhale, especially next generation, we don't want to give this kind of an air. We rather move overseas and maybe travel to India for business, or maybe do the business from wherever we are sitting. So yes, families have gone through this evolution. And today you can do business any part of the world, sitting anywhere. And that is something which we have seen clearly in last 4 or 5 years. In fact, I keep sharing my colleague Vinay, who looks at the desk on succession planning and immigration. He is one of the busiest person with us in last 4 or 5 years.
Wow.
A lot of wills have been written, a lot of health insurances have been structured, a lot of families' constitution or their asset allocation across the globe. A lot of families have taken a residency of some other place, maybe as plan B they have created. They have diversified beyond India. So last 4 or 5 years have been phenomenal as far as the evolution has happened in the thought process of various families.
That's an amazingly insightful answer. I'm reminded of this book called Small Data. Okay. Small data is what happens in a human being's mind before it turns out to be big data. So the big data is people are relocating or people are thinking of relocating. The small data is so many such factors which we just talked about. This is amazing. And
Right.
thanks for that insight. Maybe you could also help me with another insight. One of the things we find is that family offices tend to think that real estate is more of a safe haven wherever they are in the world. Okay, so I think the first line of thinking is, let me just quote unquote secure my future, next generations to come by investing in real estate. Uh, I've seen that in quite a few family offices across the globe, even non-Indian family offices. But my exposure is probably very limited as compared to what yours is. Do you also find this tendency of family offices to move towards real estate as a safe haven or as an investment?
So because if we see, Indians have been very, very conservative, and being more conservative also relate with more physical assets, something which they can touch and feel. Like property is one, gold is another example. So traditionally, we have been heavy consumer of physical assets. Not only in India, but whichever part of the world we have gone, Indians have consumed a higher amount of real estate compared to other nationalities across the globe. But that trend is changing. 20 years back, when we started client associates, that time RBI data used to come, and it used to show Indians are 88% physical assets, 12% financial assets. 10 years later, 2012, this was 70-30.
Now it's
2022, this is 65-35. Now, over a period of time, this will move more towards the average of the globe, which is 50-50. Maybe next 10 years, we'll see 50-50 allocation. US and UK today is 25% physical assets, 75% financial assets. Maybe next 20 years, we'll move in that direction. So Indonesia is somewhere where we were 10 years back. And we are 10 years behind the global average, and global average is maybe 10 years behind the developed markets. So real estate gives comfort, but again, it's not something which the new generation is looking at it. Today, India's household savings is 50% property, 15% gold, which is 65%. 35% is across financial assets, and majority of it is in fixed deposits or contractual savings. There is a very small portion towards equities, and unlisted is almost zero, or outside India is closer to 0%. Now, if someone who is young, let's say 30 years of age, if they invest, let's say 1 crore rupees in this asset allocation, fundamentally, they should be able to compound their money at 7% on a post-tax basis, which means if inflation is 6%, they will create 1% real rate of return. So 1 crore can become 30 crores versus inflation value of 22 crores. So they will create 8 crores of delta over a 50 years period. While someone who invests in a slightly more broad-based, the way family offices are investing, will create 12% kind of a compounded growth rate, 6% real rate of return, and 1 crore has the potential to become 300 crores versus inflation of 22. So they will create almost 278 CR of alpha over the inflation, which is the real rate of return. Next generation, or maybe people who are globally traveled, well exposed, how trends are shaping up across the globe, they're shifting more towards financial assets. So real estate is important. It's a key element. Globally, people consume, or as per the World Wealth Report, HNIs consumes 15%.
Hmm.
India, we are consuming 50%. My sense is we will settle somewhere between 25 to 33% towards real estate.
So basically, what I get from you is that incrementally non-real estate, financial assets are growing much faster. So people are probably still investing in real estate once in a while, but their propensity to invest in financial assets is probably 3 times or 4 times more than what it was, which is what is correcting this balance. Would I be right in deducing that?
Yes, yes, absolutely. So financialization of savings as a theme is picking up. So earlier people used to invest 80-90% of their savings in property.
Now it is
Today it
60.
could be 30%, maybe 70% is going into financial assets.
Correct. That's quite insightful. That's quite insightful. Arjun, over to you.
Hey, thanks a lot, Vikaas. I'm actually noting down a lot of nuggets that from what you're
Likewise.
actually what
Likewise,
you're
when I'm
saying.
doing that.
So you made a mention of a very beautiful phrase, mind share and wallet share. You made a mention of that. So just taking from that, what do family offices sort of ideally look for in advisors? Could you give us some insight in terms of what makes them very comfortable and convinced with a wealth advisor? So I would assume trust is one trust and confidentiality would probably be one part of that equation. But if you can sort of elaborate a bit more on that.
So I would say, Arjun, quite a number of things on qualitative and quantitative side. So if you ask me, family offices are looking at 3 C's. One, control over their complete affairs. So a consolidation, or let's say a bird's eye view of their overall asset allocation, gives them a far better grip of their entire holdings across different entities in the family or across different asset classes or products. So consolidation gives control. Second, they also need confidentiality because they want their information to remain private and confidential because it's something which is very close to their heart. And they want an organization or an advisor who practices some of these best practices in this particular space. So 4I principle is one such practice which is being practiced at Client Associates since 2002. 4I means there are only two people who are engaged in a relationship. Even if we are 200 professionals today, we do not want everyone to have an access to any particular client's information. Third C is continuity, because they are also saying, you tell us long term, you tell us compounding benefit. How long are you going to stick to this organization or an institution? Are you also looking at a compounding benefit, or are you here for a short stint for 2-3 years? All these 3 C's, control, confidentiality, continuity, gives a lot of comfort. And then, yes, there are definitely things like trust. You have to be comfortable with your family doctor. You should be able to trust. Similarly, financial doctor, you should be able to trust. You should be able to see the unbiased advice which is coming, which is good for a client or client first rather than the advisor first. You have heard of this term called as KYC, know your customer. We also say know your advisor. What kind of a qualification the advisor carries? What kind of a track record the advisor has? How stable the advisor has been at a particular organization or an institution? Can you think of working with this advisor for next 10, 15, 20 years? Can your next generation work with this advisor? Now, all those things are very important. So we feel clients are looking at all these things. And today there are various options. They can go to a very, very large institution, which has a lot of knowledge aggregation, but personalized touch is missing. So they also want personalized, customized approach, which is missing in very large institutions. They can also go to a mom and a pop shop, which is independent financial advisor, 1, 2, 5, 10 people. Their personalized touch is there, but knowledge aggregation is missing. So clients like to actually go to a boutique which has 50, 60 very senior people, maybe 100, 200 overall strength, where there's a lot of knowledge aggregation. But then the approach to do business is very, very customized and personalized. So they want to see what is the size of relationships you are managing, how many clients you are managing, what is the time allocation you can give towards each and every relationship, what is your knowledge qualification, what is your experience, have you seen different cycles of the market, or you have only seen like last 3 years, maybe they have only seen the bull market. Now, if tomorrow the cycle reverses and equity market falls, whether you have the experience to handhold clients at that point in time, whether you have the experience to take the right kind of calls at that point in time. Because as we say, health is very important. People want to live long and a healthy lifestyle. Similarly, wealth is something which is very close to people's heart. They want their wealth to be in the right hands, safe hands. Like a lot of times, clients tell us, if something happens to me, I tell my family members which office to approach. Now they are trusting their wealth with us. So knowing your advisor or knowing the organization which the advisor works for, what's their DNA, is it client first approach or is it just pure distributor? That makes a lot of difference.
Fair enough. Fair enough. You use this word financial doctor a couple of times. It's really something that's caught on with me as well. Very nice. That's a lovely phrase that sort of simplifies the entire thing so nicely. So I'll just add on another question. So when advising family offices, what are the key metrics that you would look at before advising the ideal product mix? Typically, how many asset classes or products would you think is the right number for them, or is it something that you just go by what they're comfortable with? So if you're okay with sharing the ideal ticket sizes that generally come for these family offices, and what percentage of their AUMs are they sort of willing to invest?
Right. So again, Arjun, I would say the short answer is it's very, very personalized, customized. But if I look at the market segmentation, today there are retail segment clients, which is up to 50 lakhs. Affluent is 50 lakhs to 5 crores. HNI segmentation is 5 to 50 crores. UHNI is 50 to 500 crores. And more than 500 crores is multifamily offices. Now, family office term has become very fashionable. Everyone says we are running a family office. But again, there is a certain segmentation which requires family office services. Now, what we do is we try and understand the risk profile of each and every family, whether they are more preservation mode, whether they are more in a growth mode, or it's a combination, or maybe different segments of the family or different pools of families' wealth have different objectives. Then we customize it as per the family members or different pools and arrive at the strategic asset allocation for the overall family. And then we design the model portfolio for each and every asset class. So depending if it's a multiple asset classes, maybe clients can have about 20 different managers or products with 5% exposure to each and every product is a reasonable thing. But if it's one asset class, maybe 7 to 8 ideas will be good enough. But if there is someone like I know a family office which has 1,000 crores plus of wealth. Earlier, they used to say, okay, fine, if PMS has a minimum of 50 lakh rupees or AIF has a 1 crore, let's start with only minimum size. And they used to spread it out across hundreds of ideas. And that is over diversification. They lose the significance. They will get average returns. They'll not create alpha. And over a period of time, they have become slightly more sharper. They have become slightly more rational over their thinking. So they may say, okay, fine, if 5%, maybe if I have 1,000 crores, I need to look at 50 crores per investment idea on an average. And that would be 25 to 75 crores. That's the range, depending on that asset class, the depth of that asset class, the managers. AUM which they are managing, they will customize it as per that only.
Fair enough. Well, wonderful, wonderful. Thanks a lot. Over to you, Vikaas. I think you had a lot of questions on the information overload in the market in a certain sense. Thanks.
Thank you, Arjun. I'm seeing a lot of questions coming in from the audience also. So I'm just going to ask you last couple of questions before we move to the audience questions. There's a lot of conversation at this point of time around gift city. A lot of family offices we talk to, or a lot of advisors we talk to, this just comes into the conversation. What is your view? If you were to advise an Indian family office, a global family office about gift city, could you just give some insights, your view about gift city?
So because there are a couple of trends which are happening today in HNI or family offices investments. One of the trends which family offices are seeing is diversify beyond India. Now, keeping all your eggs in one basket is not the best of thing. Be it your business or be it a particular country, we are all very bullish on India per se. So because when you and I, we started our careers, India was not even the top 10 economies in the world. And our dream used to be at some point in time, if India become a bigger economy than UK, I think it will be a moment of pride, which has happened because UK ruled over us for so many years. Today, even a prime minister in UK is an Indian. But our thought was, if we can overcome that. Now, next generation, my kids for sure, let's say when they will be starting their careers, and by the time they are in their 50s or 60s, India will be a bigger economy than US. So I'm extremely, extremely bullish on India. I feel this is the place where one has to be and one has to build their careers or businesses or professions in this country because it's like investment into equities versus like investment into a fixed income, which is what India versus US will be. But having said that, even if India is one of the best opportunities to invest today, we must and we should diversify beyond India because it's not for returns, but it's for risk mitigation. When 10 years back, this government came into picture, the LRS, which is liberalized remittance scheme, where an individual can invest $250,000 per annum outside India in a financial year. The total investment which was happening was about $1 billion from India. Last year, it was $19 billion, more than $1 billion per month. I'm sure this number will increase and it will go more than $1 billion per week over a period of time. It's just a matter of time. So Gift City actually is an enabler to do that. So you can still use LRS limit of $250,000 and invest outside India through that vehicle, or you can even set up an entity, LLP or an entity, and invest 50% of its net worth outside India through Gift City. That is something which is a vehicle which is there. And there are some big industrial houses, big family offices, which are exploring this window very, very. So Catamaran, for example, there was news that they are looking at. Mukesh Ambani has set up his family office in Singapore. I'm sure there will be many more families which will follow this. But today, if you go even the other way around, if you go and speak to investors who are sitting in other parts of the world and ask them which are your top 3 picks in terms of asset allocation in different countries, I would say because 8 or 9 out of 10 people will always pick India as their top 3 picks.
Sure.
8 or 9 of them. So I went to Israel before this attack happened. I spoke to some Israeli institutions. They are saying we are exploring or we have started investing in India. US, you go to, the perception has changed dramatically in the last 5 to 10 years. Everyone wants India to be a part of their allocation. And Gift City is a vehicle which will actually do this, enable this. So you heard about Mauritius, you heard about Singapore, Dubai as places where people were using to get into India. But now maybe our leadership wants Gift City to give competition to these places. So it will facilitate a lot of cross-border between India and other parts of the world. So you will see outward also and inward also interest coming in through this Gift City.
I completely second your point. In fact, I must also tell our listeners and viewers that if you have a chance, you should go and visit Gift City. It's coming up beautifully. It's an amazing place. While people globally are still getting to know about Gift City, I think it's probably more known in and around India, in the Middle East, in Singapore, and not as well known in places like London. But you have to go and see Gift City now. In fact, I would not be wrong if I say that Gift City is currently a value pick amongst all the financial centers which are operating around there. I am personally extremely.
There is no space available over there. It has become very expensive. So
now
right now there's a shortage of space. There is so much of a queue. People just want to set up their base over there.
Agreed. In fact, now that liquor is also being served in Gift City, I think that expands the scope quite a bit. My last question to you, and I think some part of it Arjun has already asked. There's an overload of information in social media. So you have social media on one hand, you have the younger generation on the other, and you have a very disciplined approach at the center of it. What are the key challenges? You want to follow a pre-decided approach, a central approach, a processized approach, but you have somebody from the younger generation coming in saying, listen, I read on social media that you should be looking at this, you should be looking at this. How do you handle these sort of conversations? What's your insight on that?
So I would say right now it's social media.
Huh.
At some point in time, because you used to see all these channels. 3 days market goes up, everyone's tone used to change. 10 days market falls, everyone's tone used to change, because they used to produce more masala news which can get more eyeballs. And a lot of people used to get swayed by those market news or noise, I would say, rather than the news. And they used to chase different things which were either going bad or going very good. So I would say this is something which trend has changed. People have moved from mainline stream media to social media. But this noise has always been there. And today, any client's potential or any successful investor's potential to achieve the desired returns and what they actually achieve is a lot of it depends on their emotion of greed or fear. If they can have the ability to avoid the noise and absorb it or maybe take advantage of the noise. So let's say today if market is rising, mid caps have risen so well, small caps have done the best in this particular calendar year. People want to increase their allocation towards equities because all social media, everything is pro India, pro Indian markets, pro small cap, and within equities they want to increase their exposure towards small cap. While a disciplined investor will say, okay, fine, if I had 50% allocation towards equities and today it has become 60, let me rebalance and come back to 50. And if I'm paying 10% expensive valuations for the market, rather than 50, I will come to 45%. So book 15% profits, 5% systematically go back to my policy statement of 50%. And if I'm booking profits, I'll book more from small caps rather than large cap because they had a huge run. So a disciplined investor will follow the processes. And I would say it's only the age which will teach you. So when the Great Depression happened in 1929, normally there is a saying, the older man will put less money in equities and younger person will put more money into equities. Now that's a old school of thought, which may not be very valid. But that time what happened, because if you just look at various profile of investors, how they invested, people who were in their 20s, who were first-time investors, when the great fall happened, they just moved out of equities because they thought the world has come to an end. Similarly, COVID happened, quite a number of youngsters, first-time investors, they just moved out of equities. While people who were in their 40s, who have seen 2-3 cycles of ups and downs, they stayed invested, they did not do anything. While people who were in their 60s or 70s, who had seen much longer cycle, they sold everything else and invested in equities and made a killing out of it. And similar thing which we have seen in COVID times also, sophisticated investors looked at it as an opportunity. While first-time investors, they really got scared. So I would say avoid the noise when you are managing your money. It's less of an excitement. It's such a boring process. And Warren Buffett is known for his boredom. 93, 94 years, he has become one of the richest persons in the world. just by staying very long term. He has compounded his wealth at 10% in dollar terms, 13% in INR terms. And he had the discipline to avoid the noises. So that is what we keep telling everyone. Listen to the news, but don't act on it. Just focus on your Excel sheet, just focus on your strategy and asset allocation, and just act accordingly.
It's amazing. Most of the things in life, wisdom also compounds with age.
Very well said, Vikaas. Yes.
So there are lots and lots of questions which have come in. I might just exceed the time of 5:30. I'll try to accommodate as many questions as I can. I think there are some people like Mr. Praveen Reddy and Aman Monga who've complimented, saying that this is a very insightful session. Thank you so much, gentlemen. I think Reshmi has asked a question about tier two cities, being very investment savvy, being very cash rich. What is the propensity of family offices or advising family offices there? Is it very widespread? If you could just give some insight. Tier two cities, cash, family offices, are they doing well?
So, very interestingly, Vikas, last 18 to 20 months, I've done a lot of Bharat Darshan.
Okay.
I've traveled to different cities, did a lot of sessions on the trends of investments in family offices or HNIs. And there are a couple of things which I would talk about. In fact, you mentioned about my love towards sports. What I have seen in tier two, tier three cities, what is happening over there is absolutely very, very exciting. The amount of wealth which is getting generated over there, uh, it's phenomenal. So everyone just keeps going to Delhi, Mumbai, or Calcutta, Hyderabad, Bangalore, Chennai. But there's so much of wealth creation which is happening all over the country today. And there is a huge opportunity which is lying over there. And I'll relate this with the example of cricket. There was a time when Indian team, there used to be quota system.
Hmm.
Mr. Sunil Gavaskar, very well respected batsman, is the captain. Quota hai, 4 or 5 people from Mumbai will be there. 3 people from Delhi, one each from Calcutta, Hyderabad, Bangalore, Chennai. And that used to be the constitution of T11, or playing 11 or 12 with extra man. And if you see the approach of cricket used to be, we have to preserve. If we draw a match, it used to be celebrated like a victory. Forget winning. Drawing a match was celebrated like a victory.
Interesting.
Look at last 10, 15 years, maybe thanks to IPL. Today, there is no quota system because it's pure merit. You will have maybe 1 or 2 people from each of these metro cities, but there are people from all over the country, whether tier 2, tier 3, tier 6 cities. They are coming into playing 11. And today, the approach is if India draws a match, it's like you have lost it.
Yeah.
It's very rare, like yesterday, India lost to South Africa. But hearing a match where India is losing today, even a draw is considered as a loss. I think that's the mindset which has changed. So when anyone looks at today, HNIs, UHNIs, if they just stick to tier 1, 5 or 6 cities, I think they will go wrong. There is so much of a wealth creation which is happening in tier 2, tier 3 cities. And there is a huge opportunity for wealth managers to visit these cities because people over there, they are also widely traveled. They have seen how investors across the globe are investing, how their peers in other parts of the countries are investing. And they want to be participate in this entire growth story of India. They want to invest into unlisted businesses. They want to invest in public markets. And the quantums over there is huge. Like I met someone in Bhubaneswar about a year back. He has 8,000 crores of public markets, 4,000 crores of real estate portfolio, 1,000 crores of unlisted space portfolio.
So I know where India is going to fly next. Amazing. Amazing. Lot of questions are coming in, which I think I'll send you separately. People are asking more about, what is the best succession planning. Mahinder Kumar Gupta is asking for the best succession planning vehicle in India for ultra high net worth NRIs. Then I think I missed. There's one question which came in about legal structure of a family office. How does one get done? I think these are more technical questions, and if it's okay with you, I'll probably have all of these sent across to you for your team to answer.
Sure. So
Yeah.
what we can do is, since we thought about 60 minutes, audience these days, especially on a virtual seminar like this, has a limited bandwidth also. So we should not give overflow of information,
Right.
but it's our responsibility to address each and every question if it has been asked.
Sure.
So if you want one or two questions, we can take it up, and I can
I'll ask you
promise
one.
you our team will answer every question and send it across to those people.
Oh, that's very nice. So I'm going to ask you one last question. And I must tell you, there's a variety of questions which are coming, and I'm having difficulty in choosing one question. Somebody's asking about allocation of products. Somebody's asking about real estate. But there's a very interesting question which has been asked by H. Devnath. And he talks about crypto as part of asset allocation. What is your view on that? I think we should just take that as the last question.
Right. So I would say the asset class has the potential to emerge. Today, because there is a lack of depth of data, because of which we will not be able to comment too much. There is lack of fundamentals because of which we will not be able to comment too much. Having said that, in last 10 years, 7 out of 10 years, it has been the best performing asset class. It has given a very high returns. But again, as I mentioned, there is a lack of depth. There is a lack of fundamental analysis which I can do on this asset class. So it will be wrong on my part to give any recommendation towards this asset class. There are also some regulatory challenges which are there with this asset class. So I would say one can take their own call. Outside India, maybe there are some passive strategies which works on this, which are into multiple cryptos, multiple currencies over there. Those could be studied further. Uh, and one can take a calculative call of maybe getting into it with 1%, 2%, slowly building it up. But please study this. It's a very expensive asset class, which is very volatile. It has the potential to give you returns, but it has the potential to be extremely volatile and wipe out your capital also. So even if you invest, just be mindful of investing that sum of money, which even if you lose, it shouldn't pinch you or your balance sheet.
Himanshu, on that note, if I can just give you one specific thought which crossed my mind while you were talking about this. There's this book which has been written. Thank you for coming late. It's a book written by Thomas Friedman, who's a Pulitzer Prize winner. And he talks about the fact that there are three things which are changing humanity right now simultaneously. It's never happened in the history of mankind, which is change, rate of change, and global warming. And one of the examples he quotes, he says governments struggle to form regulation because the rate of change is faster than change. So by the time you had regulations for Uber, you had driverless cars coming in, right? So I think the
Right.
same sort of struggle is going to happen with crypto. I'm also reminded, Himanshu, you remember in 2000, the whole dot-com boom. People were measuring their growth on the basis of eyeballs.
Right.
I still remember there was a stock which was a favorite, not that I'm recommending it, which was Blue Dart. It was thought that people will order and it will be delivered by air, and that is why you should pick up the stock. And look what happened after that. The whole thing collapsed. But 7, 8, 10 years later, the whole dot-com business came back as
Right.
e-commerce, correct? So my sense is you're absolutely right. In fact, I'm actually surprised to hear that 7 out of 10 years crypto has done well. This is the sort of impact last 3 years has had. You just forget the previous 7 years. But with regulation, with a little bit of experience, I completely second your point that crypto might be something which is worth studying, but one has to be careful. There have to be guardrails because currently there aren't any. So
Right. So regulatory environment is also not supporting it. There are a lot of talks happening around it, maybe the good money, maybe the bad money, which is chasing it. So one has to be mindful of this. So we as a regulatory approved organization, we are not authorized to comment on this. I'm
yeah,
saying it's a risky asset class. If you risk capital permits you to take an exposure, just take that much, even if you lose. You should not have sleepless nights because money is end of the day there to celebrate life, sleep comfortably, meet your goals, and it should not become the other way around.
No, thanks for the word compliance. I should also say that please consult your financial advisor before advising. So this is just a general chat and it's not supposed to be a recommendation. Thank you for that. We have a special prize for the best audience question, and if it's okay with you, could we give it to Reshmi, who asked about the smaller cities, the Bhubaneswar type cities, which are actually getting a lot of money. Is it okay if we give her a special prize?
Ask PMS Bazaar, they are the hosts.
No, no, it's you. The guest has to decide.
So, no. In fact, I love that question, Reshmi, for it. Thank you for asking me because this is something which I really enjoyed when I visited tier two, tier three cities. And I saw the huge potential which has to be unleashed over there in those cities. And that's something which excites. There is so much of happening in India, and that's something which gives us a comfort. Where because we are calling our kids, come back to India and build your career because uh, we saw this moment of pride of overtaking UK. Our children will see the moment of pride when India will overtake US as a economy, and that's where the future is. So,
Amazing.
and thanks to tier two, tier three cities, which has come into action now, and that will create huge opportunity for everyone.
I'm just getting goosebumps just listening to this. But thank you so much, Manshu. This has been an amazing, amazing session. I think it's a masterclass. I'm sure a lot of people will also watch it online later once the video is released. So thank you so much for your time. And thank you to Arjun, my co-host, and Akshara for hosting this entire thing. Thank you so much.